pictures?
No, I'm filming you.
Oh. I was like, you're not wanting this?
No.
But San Antonio follows what Dallas, Austin, Houston do. So as their markets start getting really red hot, we can justify, it's like, all right, 2 years from now, we're going to be in the same boat that they're kind of in. But now we're never going to get as high, we're never going to dip as low. It's a much more steady growth market.
Mm-hmm.
And I mean, it's
Plus,
much larger.
But the team that we have right now, the benefit is that right now, as soon as Austin crashes, all the money that you have from California, from all these people that are just throwing stupid money at Austin, they're all going to be bankrupt.
Mm-hmm.
You understand? The investors that are going to be left are going to be very few, like they were in the last crash.
Yep.
So we already have the team set up in Austin for that.
Mm-hmm.
So as soon as it crashes, we're the ones that are going to benefit from all
Go in
of it.
and rescue people.
Exactly. We're going to
Yeah.
be the only ones that are going to have the capital because all our partners, they're keeping their powder dry right now.
Mm-hmm.
They're cashing out. They're selling all the properties. They're waiting for this.
Mm-hmm.
And those are very few people that are doing it.
Yeah, wow.
98% of them are buying more right now. So those are all the people that are going to lose. And they're going to lose huge in Austin, Dallas, Houston. So by us doing this in San Antonio, we're not going to get affected. And then we're going to be able to jump those markets.
Is that why you guys do so many subject twos?
Right.
Yeah, okay.
Right.
Do you want to just give a bit of like a 2-second background of a subject two for people that don't know?
2-second background of a subject two.
What does it
Alright.
involve?
Well, a subject to, you do it, your standard flip, let's say.
Mm-hmm.
Your standard flip, you would need to purchase it for all cash.
Mm-hmm.
You need to put the money for the repairs
Mhm.
and the holding costs and everything, and then you sell the property and you get your profit.
Mm-hmm.
With a subject to, the benefit is that you're going to take over the existing financing, so now you don't have to come up with that chunk of change.
Mm-hmm.
You don't have to pay percentage on that money.
Mm-hmm.
So you're taking that financing with whatever the interest rate, whatever it is there,
Mm-hmm.
and if you want to pursue a flip, now all you got to come up with is the repairs.
Yeah.
So you do the repairs, you sell the property, then you pay off the loan.
Mm-hmm.
You understand? But
Mhm.
what did you risk? You risked, let's say, 20 grand, you know, with a $60,000 loan, instead of putting $80,000 out of your pocket.
Mm-hmm.
You
Exactly.
understand? And then also, if you want to do rentals, the benefit is that, like one of the ones that we're working on right now, is you take over the loan that's at $67,000 with $800 a month of PITI, principal, interest, and tax, and
Mhm.
insurance. So, and the rents there are $1,200.
Mm-hmm.
So you take over the financing, you take over that mortgage, you fix up the house which needed like $6,000 and just for rental ready.
Mhm.
You rent it for $12,000,
Mhm.
$1,200.
Mm-hmm.
So you make that spread.
Awesome.
You understand?
Yep.
And what did you
And
come to
you're-
the table with?
And you're now cash flowing. You're now cash flowing as well on the property because your underlying principal is $800 and you're renting it for $1,200. So now you're cash flowing, it's coming with financing, and it has an equity spread in the property built in.
It's a
as well.
fantastic strategy.
So yeah, I mean the exit strategy with a subject to, you can do flips, you can do buy and holds, you can do a wrap. So you become, at that point you become the bank because now you're just holding the note and you're not on the property. So, I mean, doing a subject to just really opens your doors for pretty much anything. And when it comes to outbidding your competitors, they can't pay, if somebody's trying to buy cash, they can't perhaps match your offer because now you can give them more
Yes.
because you don't have to come up with the full amount.
Correct.
So
Exactly.
now we find ourselves that we're outbidding everybody else and we're still getting a better deal.
Correct.
Because instead of coming up with the 70 grand up front, all we need to come in was with 10 or
That's
15.
right.
You see what I'm saying? When all they can do is give the buyer 5 grand because that's all they can because of how much the loan is.
Awesome.
So-
Another
Such
thing
a good
that
strategy.
works for people that are looking to buy and hold is because an institutional financer like Bank of America, Chase, Wells Fargo, they'll only allow you to have so many mortgages before they're like, no, you can't have any more. But I mean, if you're subject to it, you can have somebody else's financing, you can have 100 of them.
Mm-hmm.
And so now instead of having to be able to cap at like 5, 10 rentals, you can have 100 rentals. And they're coming with the financing, and you're building that equity, you're building that cash flow, and you can have a huge rental portfolio as opposed to just being able to buy cash on every property.
It's phenomenal.
So,
Awesome. Thanks, guys.
Mm-hmm.
What's do you want to just give your company a plug?
Sure. Bowtie Investments.
Bowtie Investments. I met
Yes.
these lovely gentlemen at a meetup the other night, and they are very cool and have great ethical values. All right, we'll hear more from you guys later.